Well, NVDA reported earnings after the bell on Wednesday, and on Thursday, the stock went down 8.5%. Does that mean it's time to sell the stock? It's been a great performer over the last couple of years, but really not a great performer over the last few months. I'm going to answer those questions in this video. Let's begin by just taking a look at the chart of NVIDIA, and you can see the big downward move today right here. You also see our sentiment stock score has fallen below 60, which is a negative. But what I want to just take a moment to discuss is why these stocks go down when they actually perform pretty well. So let's go to Google and let's just type in NVIDIA earnings. You can see it's the most searched term for NVIDIA. And I click on that and we see that the numbers are pretty good. Earnings per share beat by 5.2%. And it's been beating quarter after quarter after quarter. So why on earth would the stock be going down when they're doing better than expectations? Well, the reason is this. The market expects it to beat because quarter after quarter after quarter, the stock beats expectations. And so when expectations are that you will beat on earnings per share and revenue, and then it maybe doesn't beat as much or it doesn't exceed expectations, that's one catalyst for a sell-off. Then, of course, we also had a downgrade by one brokerage on concerns around whether these other AI services that are coming out will have a chilling effect on NVIDIA's sales. The biggest factor, though, is just this. It's that break of the upward trend line that occurred a couple of weeks ago. You can see it here, the upward trend line there. Let's draw that in blue. So there's your upward trend line. There's your breakdown. And now we've built a falling top. And we're moving down from a falling top. If we start to move through this 115 level, I think the stock can go lower. If we take a look at the 3-year weekly chart, here's the upward trend line. It was broken there, but more or less from a high. Now you're building a falling top and starting to test that support. That's a pretty strong signal that the stock is going to go lower, and it may in fact drag down the NASDAQ itself. Here's the NASDAQ 100, and let's go to the 3-year chart of the NASDAQ, and you can see that the long-term upward trend line hasn't been broken yet, but we could flirt with it soon. The difference with the NASDAQ, however, is that it is coming off of a new high rather than a falling top, and typically upward trends are broken when there's a build of a falling top, like a little high that's lower than the previous, and then a break of the upward trend line from the falling top. That hasn't happened. You see over and over again, you hit new highs, you pull back, but it's not the end of the trend. Go to new highs, pull back, but it's not the end of the trend. New highs, pull back, new highs, pull back. You see it over and over again. Well, when you get that build of a falling top, that's usually a good signal that the market is topping, and that's something I see potentially happening in NVIDIA, because if we go to the 3-year chart, you have your upward trend line, you've broken it from a new high. Now we've got that build of a falling top and we're rolling over. I think NVIDIA more likely to go lower than higher in the weeks and months ahead, not because it's not a good company, not because they're not continuing to beat on earnings, but because the market's expectations are greater than what the company is delivering on. Hope you've enjoyed it. If so, click on that like button, subscribe to the channel. Remember, at Stockscores.com, we have a free weekly newsletter that goes out every week, plus events coming up. Free classes coming up in the month of March. So take a look at that. This is all free to register for. I hope to see you again soon. Trade well.